Hello again, thanks for joining me. I'm doing a live US futures weekly chart analysis again. And as usual, the first chart we look at is the US dollar index. I look at that first because it's associated with so many markets, so many commodities and currencies have a relationship with the US dollar, and it affects their movements considerably. Now, if you remember last week, I suggested that some weakness had appeared in the US dollar index chart here. And that was confirmed this week with a down bar in response. Now, at the moment, not too much damage has been done. If this low here was to be taken out, that would be the breakdown. That would be a change in sentiment. At this point, it's really just a pullback and not too serious. Yes, price has come back, but price hasn't broken down. And this level here, it's approximately 101. That's the level to watch for any significant weakness to emerge. And if there was significant weakness in this market, commodities would really get a benefit. They'd get a huge tailwind, so watch for that. 101 on the US dollar index. If it's clearly broken to the downside and confirmed, so if it pushed lower, attempted to recover, and then was unable to recover, that would be a serious event in the market. Next chart is S&P 500 futures. It's the E-mini. And there's an attempt to reverse coming in here. There was buying on this bar in particular. This was a sweep lower, probably to catch stops below the low of this bar. And at the time you wouldn't have realised that there was so much buying in that bar apart from the close off the lows in both cases. But with the response this week being up strongly, you can say there was buying in those two bars for sure, particularly the second one, which was hidden. What's effectively happened is all the buying's taken place within these two bars here, and that's left a supply vacuum of some sort within this range and allowed price to move higher with ease on relatively low volume or lower volume, slightly below average. There's likely to be considerable difficulties found here. I expect supply to be drawn out. It's not going to be easy going. There'll be trapped supply in there for sure. So although price has popped its head back above this level, it's not going to be easy going, and it may well fail here. It may just fail and come back down. There might be like an attempt here to move higher that fails, and then price moves down in response, because this is going to be tough going. I don't see there being a huge amount of strength in this market, but there might be an attempt to move higher, and we'll see how it goes. Next chart is the 10-year note. I'll do this one next because it trades roughly the inverse to the S&P 500 futures. There was an attempt to support the market recently. You can see that some buying has come in. Spread narrowed this week as price pushed above this level. Now, volume's really high for contract rollover. You see the contract rollover is a regular monthly occurrence, and it's more difficult to understand just how much volume was in the market this week. And if you look at it like that, it was slightly less than all the others. So we won't say it was low volume, but maybe it was modest volume, and that might account for the narrower spread to some extent. Really, if this market's going to turn around, and it's probably unlikely that it will, it really needs to come up and challenge this level and effectively break above it, perhaps test it for strength, and then start accelerating away. I'm not sure it can do that, but it may well just push up to this level and then fail. But we'll see. It looks like it's going to make a bit of a challenge, or at least attempt to go higher. So we'll just see. But at this point, I'm not holding out strong hopes for it, but the options are open for it if it's strong enough. Copper price futures. Copper price futures broke down a month or so ago. You can see price gapped below these two levels, and that was significant for this market. Here's your support levels below, and you can see this level here caught a bid and price pushed back up to it after dipping below, and in response the next bar was up, so buying came in. This week prices stalled a bit at this level. It's found it difficult to move back above. That's kept the spread narrow, although volume wasn't particularly high, so the market was a little wary. This is going to be the more difficult level to overcome later when it gets up to this gap, if it can get up to the gap. But at this point, looks like it's absorbing supply at this level here. We'll just see how much strength emerges in the market and whether it really can push up and issue a challenge to where this gap formed previously. Where that gap formed will have trapped people in up here, traders, a proportion of which would still be holding, and that will cause resistance for sure in the future if price gets back up there. Okay, next one is gold futures, gold price futures. This is the important level here. This is the level to watch. You can see price moved up and tagged it this week, just in there, but it actually settled back just below that line. And remember this level here for the next one here, or this bar in particular. Remember that level. Gold is just fractionally below it at the moment. You'll see why in a sec. So price has caught a bid here, and it's not particularly strong at the moment, but price is moving back up. It may issue a challenge to this important level if US dollar index continues to move lower. You may see price come up, perhaps come back and test before trying to accelerate away. There's likely to be trap supply in this level here, so anything above that level there'll be resistance. You'll find selling pressure emerging through there, and it really won't be free until it gets perhaps to that level there. So I know there's a few people that watch this, so this is the important level to watch. If the price can get above that, there's likely to be resistance above this level, and for the market to be in clearer air, this is the level to watch. And you can see by the scale alongside round about the prices. This is a futures market, it's not the spot, but they're fairly close. Okay, next chart is silver. Now I asked you to remember that level before where price was just below. That's this level. Gold is just fractionally below this level at the moment and tagged it last week. This is an illustration on how much weaker silver is trading since this point in time, which was June. How much weaker the silver market has traded to gold. All of this effectively went sideways at this level on the gold market. It didn't travel down like this. Silver has caught a bid as it dipped below this level. It's a bit unfortunate that it dipped below this level because this is below support, and it means that there's going to be some sort of resistance found sort of around here, because people will have been trapped in, and if they've held on, they're going to want to get out. So that makes it a little bit more difficult for the market to push above this level, to push above the 22. It's going to have to absorb any supply sort of in this level before it can go higher. And it is unfortunate because here you've got a gap down which trapped these people in a bad position, some of which will still be holding, no doubt. So once price, if price can get above this level, There's another gap here to negotiate, and then you've got more resistance that's expected through here. So this is just a hard push higher. If the market's going to come up and try to challenge where gold is at the moment, up here, it's got some real difficulties. There's a lot of absorption that needs to be taken place. Anyone who's holding in here, who's had the fright scared out of them because prices threatened to break down here, and looking to sell at break even if price comes back to their level, then all that supply is going to need absorbing as price moves through this level, and that's going to make it tough going for a while. Next market is light crude. Light crude is super strong. There's just no doubt about it. This is the level to watch. Obviously it's been marked already, but if you just have a look at this bar here, has traded within the range of this bar, and then this bar here is traded within the range of this bar, and then this bar has traded within the range of this bar, and this bar here has traded within the range of this bar. This is all absorption taking place. More than likely, it's always hard to tell initially, but more than likely this is bullish absorption in the market, and there's not going to be a significant breakout and acceleration. It looks like this market is super strong and price is going to absorb its way higher, more like this, and stay somewhere within the range like that. This looks like it's bullish absorption taking place. If you go back a couple of videos, I did a video on it just yesterday, and you can look at the principles a little bit more closely, but it's showing the signs. There's clustering of closes here, here. There's threatening down bars that see no downside follow through, and a pressing nature to the upside. Although it's not confirmed at the moment, and it's always difficult to tell initially, this looks like bullish absorption is taking place in the market. This market is really strong. It's highly unlikely it's going to break down, and I expect it will continue higher, but at a grinding pace. Next chart's the Aussie dollar. The Aussie dollar broke below an important low here. In fact, there was a gap down there, and there was some buying off the lows. You can see price closed off the low, but it was a deep penetration, and that's always a concern. That shows that if the market is weak for any reason, if the US dollar accelerates higher again, this market will likely break this support level. It wasn't as strong as it appeared. It held good here, it held well here, it penetrated really deeply here, and that's always a concern. But price did push back and recover above the support level in the second week, and this week has seen price edge higher again, albeit on below average volume. So the market's vulnerable, there's no doubt, but it's moving in the inverse to the US dollar for now. When there's some strength back in the US dollar, if it emerges, we'll have to see if the market can find support back at the 70-cent level and bounce again, or if it's not, then and it breaks back through, a second break below that level probably would be a significant break. Last chart is Bitcoin futures. Bitcoin was unable to hold on at this level. Now this level is quite a strong level, or it should be. If that level gets broken, or now if the market closes below that bar's low where support came in after gapping down here below this low. This gap is always significant, remember that. They're generally intentional. But buying did come in off this bar's low on increased volume. Absorption last week on low volume. Prices edged lower this week on a substantial increase in volume, and price is still comfortably off this bar's low. I would suggest that was strong buying, but it wasn't buying up. This was waiting for the market to come to whoever's buying and they were absorbing it. This was support coming in. Keep your eye on this level. If the market breaks substantially below 30,000, this level will come into play. If that's broken, all bets are off. You'll probably find that any buying on this bar and this bar is dumped and the market will head lower sharply. But while this, let's just clean that up. While this bar remains in play with buying on it, this is the 30,000 low, the significant low. While the market remains above that level, with potential buying here and here, then there's support coming into the market. A break below that level would be significant, and I don't expect in the real near term, because it looks like an accumulation pattern, that that level will be broken. But this will be a significant level to get past, and then here. So watch this market closely, because what happens here is going to be important. Okay, the two levels to watch that are significant for this market up here are the low of 25,350 and the high of 34,455. That's these levels here. If the market moves significantly below or above these levels and proves that it's either strong or weak, it will determine where this market's going in the near term. I expect price may continue sideways for a little period of time. If this is truly an accumulation, and it appears so at the moment, there'll be a period where the market will trade within this range, sort of like this, and do some further absorption and accumulation before there's any significant attempt to move out in either direction. Okay, thanks for your time. Hope that was worthwhile. See ya.